Plug Power Inc. is trading at $2.34 USD right now, reflecting a move of plus 0.040 or about 1.74% in today's session. While the broader market is seeing a bit of a mixed bag with the tech heavyweights like Nvidia stock and Apple stock often dictating the general mood of the indices, Plug Power is carving out its own narrative today. If you look at the screen on your Robinhood app or your interactive brokers platform, you might see that green tick and think the storm has passed. However, the reality beneath that 1.7% move is far more complex than a simple daily gain. Most investors looking at their Schwab Intelligent portfolios or checking their Fidelity brokerage accounts right now are likely seeing a stock that has been through the ringer over the last 12 months, swinging from a 52-week low of 69 cents to a high of over $4. The immediate insight you might not have expected, given the persistent skepticism surrounding this company, is that Plug just reached a massive milestone in Europe with the completion of a major electrolyzer installation at the Sines Refinery. This isn't just another press release about a future plan, it is hardware in the ground in a region where the mandates for green hydrogen are becoming legally enforceable. This creates a fascinating tension because the market expectation is that Plug Power will eventually run out of runway before the hydrogen economy actually scales, but the reality is that they are currently building the very infrastructure that makes that economy possible. When you think about the typical sentiment around Plug Power, it usually falls into one of two camps. There are the believers who see this as a once-in-a-generation opportunity to get in on the ground floor of the next energy shift, similar to how people looked at Tesla stock a decade ago. Then there are the skeptics who point to the constant need for capital and the potential for share dilution. If you're using Fidelity Wealth Management or perhaps a self-investing approach through SoFi Invest, you've likely seen the headlines about the special shareholder meeting that took place recently. The company had to ask for permission to double its authorized shares. That is the kind of news that usually sends investors running for the hills because it signals that the company is not yet self-sustaining. But here is the contrarian take that the market might be missing. By clearing those hurdles and reaching a new agreement with Walmart that removes certain dilution triggers, the management is essentially clearing the deck. They are trying to move away from the going concern warnings that haunted them in late 2024 and early 2025. They are betting that if they can just bridge the gap to late 2026, when they expect to be EBITDA positive, the narrative will shift from how do they survive to how big can they get. Right now, the trading volume we are seeing on the Interactive Brokers trading platform suggests that institutional activity is starting to stabilize after a very volatile start to the year. We are seeing nearly 100 million shares change hands in some sessions, which is massive for a stock at this price point. This tells us that the smart money is actively repositioning. Whether you're using a Fidelity mobile app or a Robinhood app, you have to realize that when a stock is in this $2 range, every penny move is significant in percentage terms. The volatility is a feature, not a bug. If you're the type of person who prefers a more hands-off approach like Schwab Intelligent portfolios, Plug Power probably isn't the cornerstone of your strategy. But for those doing active online investing, it has become a primary vehicle for betting on the energy transition. The recent CEO Reddit Q&A was a bold move to speak directly to the retail crowd, and while it didn't solve the long-term funding questions, it did provide a level of transparency that we don't often see from companies under this much pressure. It showed a leadership team that is fully aware they are in a race against time. The daily swings in Plug Power often mirror the broader risk-on or risk-off sentiment in the market, but it's also highly sensitive to federal policy. If you follow Nvidia stock or Tesla stock, you know how much a single earnings report or a government contract can change everything. For Plug, the catalysts are different. They are waiting for the final rules on the clean hydrogen production tax credits. The expectation was that these credits would be a simple win, but the reality has been a regulatory slug over the three pillars of additionality, deliverability, and time matching. If the government provides a favorable final ruling, the economics of Plug's Georgia and Tennessee plants change overnight. These plants are already producing tens of tons of liquid hydrogen per day, which is a fact often lost in the noise of the stock price. This isn't a company that just exists on a PowerPoint slide anymore. They have a functioning network, and they are the largest user of liquid hydrogen in the world. When you place a trade on your Fidelity trading platform or look at your Robinhood investments, you have to realize that when a stock is in this $2 range, every penny move is significant in percentage terms. The volatility is a feature, not a bug. Let's talk about the business model for a second because it's often misunderstood. Plug isn't just selling fuel cells, they are trying to own the entire value chain. They make the electrolyzers that create the hydrogen, they build the liquefaction plants to store it, they provide the trailers to move it, and they sell the fuel cells that actually use it. This is an incredibly capital-intensive strategy, which is why you see so much concern about their cash burn. In the most recent reports, we saw a significant improvement in their margins, moving from a massive loss towards something that looks like it could reach neutrality by the end of the year. They are cutting costs with something they call Project Quantum Leap, which is a fancy way of saying they are finally getting disciplined about where every dollar is going. They've cut a significant portion of their workforce and consolidated facilities to make sure they aren't wasting resources. If you're using SoFi Active Investing or an individual brokerage account at Fidelity, these are the metrics you need to be watching more than the daily price. Comment below how many shares of Plug Power you currently hold and what your average cost basis is right now. It is always interesting to see how the community is positioned in these high-conviction names. Looking at the broader sector, the momentum for clean energy has been overshadowed by the massive returns in artificial intelligence. While everyone was chasing Nvidia stock, the industrial equipment and green energy sectors were largely forgotten. But we are starting to see a shift in institutional interest back towards real-world infrastructure. The data center build-out that is being driven by AI requires an immense amount of power, and companies are looking for carbon-free ways to provide backup electricity. This is where Plug Power's stationary power units come in. They recently signed a letter of intent to collaborate with a major data center developer. If that turns into a firm contract, it could be the validation the market has been waiting for. The expectation is that data centers will just use batteries or traditional grids, but the reality is that the grid is already stretched to its limit. Hydrogen offers a way to store massive amounts of energy for long durations, something that lithium-ion batteries still struggle with at scale. If you're comparing investing sites or looking for investment help, you'll find that most analysts are still cautious with a consensus hold rating. But remember, by the time the analysts move to a buy, the stock has already made its move. The risk here is real. There is no denying it. If they can't close their loan with the Department of Energy, or if their internal production costs don't come down fast enough, the dilution will continue. But the opportunities are also real. They are expanding into Australia and Namibia, and their European footprint is growing. They aren't just a U.S. story anymore. When you look at your Fidelity IRAs or your Interactive Brokers account, you have to ask yourself if you believe hydrogen is a necessary part of the future energy mix. If the answer is yes, then Plug is the most integrated player in the space. The past performance of this stock has been a roller coaster, and it's important to stay grounded. In 2021, this was a $60 stock. Today, it is around $2. That kind of drop can be devastating, but it also means the valuation has been compressed to a point where the downside might be getting limited, especially as they start to show real revenue from their electrolyzer sales, which grew nearly 50% sequentially in the last quarter. This is the part of the story that often gets skipped. The manufacturing side of the business, the Rochester Gigafactory, is actually performing quite well. They are producing megawatts of capacity that are being shipped globally. This is a real industrial company that is simply struggling with the high costs of being a first mover in a brand new industry. As we look towards the final months of 2026, the catalysts are lining up. We have the potential for interest rate cuts, which would significantly lower the cost of capital for these big infrastructure projects. We have the ramp-up of the Louisiana and New York plants, which should drastically reduce the cost of the hydrogen Plug has to buy on the open market to fulfill its contracts. And we have the potential for more blue-chip partnerships like the ones they already have with Amazon and Walmart. If you're doing online investing through a Robinhood app or SoFi investing, you have to be prepared for the fact that this stock can move 20% in either direction on a single headline. It is not for the faint of heart. To summarize, Plug Power at $2.34 is a company at a crossroads. The expectation of failure has been priced in for a long time, but the reality of their physical progress is starting to create a different picture. They have the hardware, they have the customers, and they finally seem to have the financial discipline. Whether you're using Fidelity ETFs to get broad exposure or managing your own individual brokerage account to pick specific winners, Plug Power remains one of the most debated names in the market. The tension between its capital needs and its massive potential is what keeps investors hooked. We have seen the floor at 69 cents, and we have seen the highs. Now we are